Hey everyone, welcome back to 51%'s Crypto Research Podcast. I'm your host, Tom Shaughnessy. Before we jump in, I wanted to point our listeners to 51pct.io, linked in the show notes below. This is our site where we share all of our crypto analysis that's read by the top leaders in the space. We just released our deep dive on interoperability and composability, two major trends that we believe will lead to a centralization of current blockchains and the potential death of smaller or redundant chains. While you're listening on your browser, pull up 51pct.io and sign up for alerts. If you think our podcasts are extensive, check out our analysis. Turning to the podcast, today I had the pleasure of having on Spartan Group's Jason Choi for an insider's take on the Asia crypto scene. I was thrilled to have Jason on. Jason gives us the entire lowdown on the crypto scene in Asia. He informs us on the differences versus the West on crypto funds' involvement in governance, their investment focus, and an insightful look into the entire scene. I think this is a very valuable podcast because I believe the Western part of the world has very limited information from Asia, and even less so from credible sources. I think Jason's a very credible source, and he shares a ton of great insight. Jason also informs us as to how funds in Asia get involved in projects, such as through generalized mining, where funds take an active role in the creation or development of specific projects beyond just an investment. With that, here's my conversation with Jason Choi. Hey everyone, welcome back to 51%'s Crypto Research Podcast. I'm your host, Tom Shaughnessy. Today I have Jason Choi, the host of the Block Crunch podcast, which is one of my favorites, and an associate at the Spartan Group. Jason, how's it going?
It's going great. Thanks for having me on, Tom.
Yeah, it's a pleasure to have you on. So Jason, let's get started with how you got started in crypto.
For sure. So I started in crypto back in the US, but I'm currently based in Hong Kong, where I'm an investor with Spartan Group. And my training was a little bit all over the place. I first got my bachelor's in economics at Wharton, and there I interned at Bridgewater, which is a macro hedge fund. So got a little exposure to finance there before I decided to spend more time on the tech/VC/startup front. So I helped with growing a decentralized VC fund called Country Capital. And after that, I spent some time learning how to code. And at night, I started dabbling in crypto trading after reading a bit about Bitcoin in a fintech class, actually.
Wow.
So later, I joined Deloitte as a consultant. I helped out with their blockchain practice. And at night, I'll be kind of trading crypto as a crazy retail trader who has no business trading. And like a lot of retail investors, I made a lot of mistakes and also had some lucky wins here and there, but I wanted to make sure that I capture all of those lessons. So I reached out to people who actually knew what they were doing, who were the fund managers, the investors, the developers in the space. And you were, of course, one of those people that I reached out to. And I just started recording all of those conversations, turned that into a podcast called the Block Crunch Podcast. And earlier last year, I joined Spartan Group as an investor, kind of applying a lot of the learnings that I've learned, and I'm still learning a lot, and it's been an incredible experience so far.
That's awesome, Jason. Well, I don't want to spend too much time on Spartan Group. I definitely want to frame this as what we can learn from you with your focus on Asia. But let's go into Spartan Group a little bit. I mean, what's the focus of Spartan Group?
For sure. So Spartan Group is I guess we can characterize it as a general crypto firm, and we're started by a team of ex-Goldman Sachs bankers and investors. So in Singapore, we have an advisory arm, which helps projects with fundraising, community, and generally growing the Asia presence. And we can talk more about that later as well. And here in Hong Kong, we have a hedge fund arm, and I work with our CIO, Kelvin, who was a partner at Goldman Sachs before he ventured out to the hedge fund and VC worlds, before he finally started Spartan Capital, which is our hedge fund arm. So we are a pretty strong, small and tight team. We have around 8 people on the team across the advisory, the fund, and our new compliance arm. So it's pretty befitting of the name, in our opinion.
Yeah, that makes a lot of sense. So I want to get into the crypto scene in Asia. I think that we, in the Western part of the world, don't get enough information about the companies and the ecosystem and everything going on there. So I guess, what's your take on the high-level differences between the two communities, if you had to frame it?
Yeah, for sure. So I think for a lot of US investors who might not have a lot of experience or exposure to Asia, it's easy for them to think of Asia as a completely different world, which in many ways it is. But if you're like a lot of other crypto investors who are spending a lot of time on Twitter, where we do have some fund managers, investors, and developers from Asia constantly highlighting the difference between the two places, you may get a warped view of how different the two places are. But in reality, the places are quite similar. And I'd say that for the majority of the major Asian markets like Hong Kong, Singapore, Korea, and Japan, it actually shares quite a lot with the New York market more so than San Francisco. So this is probably an overgeneralization, but based on the hours of conversations that I had with investors from those regions, it seems like people and funds in San Francisco generally see crypto as an enabling technology, kind of like a new paradigm, whereas investors in New York see it more as an asset class. So I would say that for the majority of the markets, right, in Asia, like Hong Kong, China, Singapore, Korea, and Japan, again, we probably share more with New York in the sense that we view crypto as a burgeoning crypto asset class. And a lot of us are coming in from a financial background, coming into the space as investors.
Got it. That's interesting. And Jason, does that generalization kind of extend to retail investors, or is this more for the funds in the space, do you think? Like that those in Asia are more focused on the tech and us in America are more focused on it as an asset class?
I'd say that, so little correction there. I think what I meant to say was for a lot of the Asian markets, we generally view crypto more as an asset class and less of a technology, actually. But of course, again, that's an overgeneralization. And to answer your question, I think it extends generally to the retail class as well. And as to the reason why, I think we can trace this to some upstream reasons, right? So in a place like San Francisco, you have local talent pools where the majority of the high-paying jobs are in computer science or in engineering, and you have schools like Berkeley and Stanford constantly churning out a lot of high-tech talent. Whereas for a place like Hong Kong or even New York, the majority of the high-paying jobs are in finance. So as a result, your education is kind of skewed that way, where a lot of people study finance, study accounting, and an extension of that is the people who ended up going into crypto are from that background as well. So it makes sense that more people are viewing crypto as an asset class through a financial lens, more so than from a technologist lens in these Asian markets.
That's super interesting, Jason. And just on the projects themselves, I mean, what's the difference in the projects coming out of Asia versus the projects coming out of the US? Are there any key differentiating factors between the two?
Yeah. So I think I can answer that question in a couple different ways. So first of all, there are different types of projects, right? So there are the token projects, which, to be completely honest, most of the more interesting developments, more of the deep tech cryptography, still comes from places like the US, especially Silicon Valley. And while we see a lot of developments in Asia, it's definitely more of a focus on kind of the infrastructure and I guess services front, right? We have a lot of exchanges, big exchanges and miners here in Asia. We have Bitmain is based here in Asia. A lot of the large exchanges that you can think of either have their offices set up here or have teams based here. But in terms of the technological development, I'd say that most of the exciting things are still coming from the US. But I will caveat that by saying that the general culture of entrepreneurship in places like China, for instance, are definitely picking up. And to give you a very recent example, right, the day of this recording and when we're discussing this right now is the day that Grin is being launched. And to incorporate the Grin token onto exchanges, it requires slightly more complex procedures than incorporating any other random ERC20 token. And the fastest exchanges to be able to implement, to be able to incorporate Grin onto the exchanges, by far, at least from what I've seen, are mostly Chinese exchanges. And I think that gives you a sense of how fast people are able to execute and how much hustle people have, I guess, on this part of the world. And that, of course, has a lot of kind of macroeconomic reasons as to why that is. And we can dive into that later as well.
Yeah, that's interesting, Jason. And we put out a privacy coin deep dive and we covered Grin and Beam. It's been fun to watch those two projects launch because they're both based on Mimblewimble, but Grin is more open source, Beam's being championed by a company, and the inflation schedules are very different. Any thoughts there on which one you think could be more successful or rise up?
Yeah. So, like you said, right, Beam is definitely more of a for-profit venture, I guess. They resemble more of a centralized company. And I think Grin is more exciting for a lot of people because it reminds them of the early days of Bitcoin, where the only way to get exposure, I guess the same for Beam as well, but Grin's ideology is more kind of, like you said, open source, more decentralized. And I think just looking around us, I think our friends at Primitive Ventures, Eric Meltzer, recently put out an estimate that there's around $100 million put into SPVs from funds just to get some exposure to Grin through mining. And personally, I think it's probably a little bit more than that. And it just goes to show how excited people are about this whole Grin thing. And I think it's going to probably be bigger than Beam just based on anecdotal evidence.
Yeah, it's interesting. I'm to be honest, I'm out of the gate on who could win here. My take is that it's very hard for a small project to get off the ground, so it's better that it's being pushed by a centralized company in Beam's case. But on the other hand of that, I think that if Grain could get past that hurdle, it could be successful there. But I don't know. I just think the market's too small to have two of basically the same implementations of a privacy coin when they're also up against giants Monero and Zcash.
Yeah, absolutely.
Yeah, we'll see. But, just going back to, I guess, switching over to regulation in Asia. I mean, I know that the China crackdowns on crypto constantly was more of a 2016, 2017, way more in 2018 theme. How was that when it was occurring? Because on Twitter, everyone would just go crazy and Bitcoin's price would just get volatile. But what did the crackdowns actually mean for you guys?
Yeah, so funny that you mentioned that because when China cracked down on, I guess, ICO investing and crypto trading, it wasn't the first time when you mentioned that they cracked down in 2016, 2017. They have issued a couple of statements even before that, I think in earlier, maybe 2014, where they quote unquote banned crypto trading. And I suppose the magnitude was slightly bigger in 2017 because we were well into the altcoin hype cycle. And I remember that the majority of the capital that was trading crypto, or at least a hefty fraction of the capital that was in crypto was renminbi, was the Chinese yuan. But after that ban, we immediately see the yuan drop to below 10% of the entire capital pool. And then suddenly other currencies kind of poured in and fill up the vacuum that was left behind by yuan. And that was something that's very telling for me, right? Because that shows you that technology, or in this case, I guess speculation, will always favor places where regulation is a little more favorable. And given how hard-handed China was back in 2017 when they banned crypto trading, we immediately see kind of USD overtaking yuan. And I think that has wider implications for the crypto space in general too. And not to go on too long of a rant, but I think last week China actually declared that any blockchain businesses must collect any type of ID or any type of number, any type of phone number of any user of any blockchain platform. And I think it goes to show that they're taking a very cautious approach to monitoring the technology. There's definitely a lot of optimism in China amongst developers, even amongst regulators, but they also want to make sure that in a nation with 1.4 billion people, right, they want to make sure that this technology is in use for nefarious purposes. So yeah, it's a very complex topic, and I don't purport to be any type of an expert on it, but it's definitely very interesting to keep track of.
Yeah, that's great insight. And Jason, do you think that, say, in an extreme example, Bitcoin can actually be used to, say, destabilize their political environment, or do you think that that's way too, dystopian and out there?
Yeah, I think that's the fun thought experiment that a lot of people like to have, and I think it's totally possible. I'm not sure if it can destabilize the government per se, because I think any motivated government parties can easily shut down Bitcoin by going at the bottlenecks, right? By going at the choke points, which are, of course, the miners or the people who can accept Bitcoin. And I guess, in a way, you can't really stop people from having Bitcoin wallets, but there are a lot of different things that a motivated regulator or governmental body can do to kind of choke off the interfaces that you will have with Bitcoin. And I recently read a book called The Third Revolution by Elizabeth Economy, and she is the director of Asia Studies at the Council on Foreign Relations. And she did an amazing episode on kind of Chinese regulation and their stance on technology on the Hidden Forces podcast. So I highly recommend everyone to check that out. And in her book, she also dedicated 2 chapters to talking about just Chinese regulation and their previous stance on technology, which is very fascinating to look at. But to go back to your question, I honestly don't know. I think it would be not too far-fetched of an idea given what we've seen in Venezuela, but I'm curious to see what actually happens in the coming years because given the macroeconomic environment we're in, I think we might see a real test for Bitcoin.
That's interesting. And Jason, if we had to zoom in a little bit on Hong Kong and say Singapore specifically, what's the crypto scene there look like? Is it very different from Asia overall or the US, or is it similar to what you described earlier?
Yeah, I think Hong Kong is more of a microcosm of the rest of Asia. And the local talent pool here, many of the smartest folks are from a financial background. So whatever trait that I talked about just now are probably amplified in Hong Kong, in that most people in crypto are traders, are market makers, are funds, are investors. We do have some developers and maybe a dozen projects here, but I would say that the developer scene is definitely stronger in Singapore. And on a regulation front, Singapore government is very open to taking a very cautious and open approach to crypto. They are issuing some sort of regulatory sandbox for different projects to basically experiment there. And Hong Kong's doing something very similar. But at the same time, you can see that regulators aren't quite ready to completely embrace the idea of crypto yet, with the recent kind of Bitmain IPO maybe falling apart and the K9 IPO also falling apart back in November.
Yeah, that's interesting. And everybody says that blockchain and crypto developers are around the world, but what I'm hearing from you is that it sounds like a lot of them are actually concentrated, say, in the US. I mean, are you actually seeing in practice that, projects are have globally distributed devs that are based in Asia and US and Hong Kong and Singapore, or are you seeing it basically still centralized, which kind of goes against what a lot of people talk about?
Yeah, I think the media definitely gives a kind of skewed portrayal of what it's actually like. A lot of the high profile projects that you see shared on TechCrunch or CoinCenter or any of those outlets are from the US, just because they are kind of Western outlets. But to go back to your question, I do think there is a high concentration of developer talent in hubs like SF and even New York. I would say that the issue isn't that we don't have developers in Asia. We definitely do. And we do have a healthy community of developers in hubs like Singapore and in major cities like in China, like Shenzhen and Shanghai. But I'd just say that they're probably not as concentrated as a place like SF, and the infrastructure around them are still developing, right? So I guess zooming in on Hong Kong, which is where I'm based, so where I have the most expertise on, we definitely see more developers being interested in blockchain technology and technology in general, but the VC ecosystem is still establishing, and you can't really build a tech hub without the capital and without the talent, without a perfect storm of all of these elements that grow an ecosystem. So I think it's still early days in terms of technology, as far as technology goes in market like Hong Kong or even Singapore.
That's interesting. And geez, we go to a lot of meetups here. It seems like every project has more meetups than we could attend. I'm based in New York, so there's, people are double booking me to go to meetups all the time. There's so many. What's the meetup scene like in Asia? Are there a lot of meetups? Are there only project-specific meetups? Are there meetups for, say, developers and retail investors? What's the scene there look like?
Yeah, so when I first came back to Hong Kong, I did go to a few different meetups here, and there is a healthy community of Bitcoiners here and Ethereum people here. But again, most of the people who attended those meetups tend to be from a financial background. Maybe they are kind of exchange builders, investors, and traders. And there's nothing wrong with that. I just think it's pretty interesting how different it is from, say, a developer meetup in San Francisco. But that being said, we do see more projects starting to have a more aggressive approach to growing their developer community and not just the investor communities in Asia, right? So we have projects like Tezos. They recently partnered with some universities in Singapore to train students to code in OCaml. We have CryptoKitties partnering with a video game developer here in Hong Kong, actually. And Algorand is having the first ever meetup in Hong Kong. And Blockstack just had the first conference in Hong Kong last week as well. So I definitely think that we are at a stage where a lot of projects in crypto are starting to see the significance of Asia, and they're starting to target these places that they consider to be the central hubs for tech or for finance, like Hong Kong, like Singapore, like Korea, like Japan, and we're going to see more of those.
That's interesting. And Jason, just staying on the Asia scene here, what's the take in Asia on the interplay between, say, enterprises and existing businesses in crypto? And I guess this is a two-part question, but are you seeing normal exchanges in Asia get aggressive on crypto or start implementing it, kind of like we're seeing with the New York Stock Exchange and the NASDAQ and stuff like that? Or are you seeing them kind of sit on the sidelines here?
Yeah, I think it's definitely more of the latter right now. From what I've seen, at least on the exchange front, I don't think the Hong Kong Stock Exchange is very, very anxious about starting some sort of a crypto asset exchange yet. But that being said, going back to your first question, when you first mentioned about, enterprises or established businesses going to crypto, it's funny you asked that because by looking at a lot of funds, especially in the recent bear market, right? A lot of funds are, I suppose, taking a slightly different approach, whereas before they are pretty gung-ho and pretty aggressive on kind of Web3 and utility tokens and the entire thesis there. More funds we're seeing are pivoting over to a strategy where they're looking for existing and established businesses with a healthy number of monthly active users, pivoting over to crypto or issuing these so-called reverse ICOs. And I think we might see more of that, and that might be an easier on-ramp for Asian businesses to break into crypto than to try to bootstrap some sort of a grassroots developer community and build something completely open source. So this is still very early stage, of course, but I think in the coming years, we might see more quote-unquote reverse ICOs or established businesses experimenting with the idea of crypto tokens from Asia, especially.
Yeah, that's interesting. And Jason, are you seeing the push that we're seeing in America kind of with AWS and Microsoft Azure and IBM Cloud and these, large cloud companies get in the space with, permissioned blockchains, and they're trying to, do a lot with enterprise companies, or is that not there in Asia either?
I think the US is definitely taking a more aggressive approach than a lot of Asian companies. But that being said, large Asia tech companies are also experimenting with crypto tokens. And just to give you a few examples, right? I remember hearing that Kakao, which is, of course, a popular Korean messaging app, is experimenting with their own token. And some large Chinese companies, and there are only a few of those, are experimenting with issuing their own tokens as well. So I'll definitely say, keep your eyes on the headlines in the coming months. We might see something very interesting.
Yeah, that makes a lot of sense. So just switching gears back to the market, Jason, what's the investor appetite today in Asia? Has the bear market affected it at all, or?
Oh yeah, absolutely. I think it's definitely hard for any project or even funds to raise capital right now, right? So a few months ago, we'd see, maybe more than a few months ago, but how time is condensed in crypto. Early in 2017, you see projects raising at $100 to $200 million in valuation, and they closed the rounds within a week. Whereas right now, we see projects revising down their valuation from 80 to 30 to 20 to 8 to rounds that more resemble traditional seed stage investments, to more traditional seed stage investment rounds. So I think that tells you a lot about how appetite has changed on the VC front. And on the LP front, we're also hearing stories of funds being hit with redemptions just because of the downturn in the markets, and not a lot of funds had a kind of holistic long short strategy or hedging strategy in place. So the funds are taking a hit as well. So I definitely say that investor appetite has been affected, as it has in most other markets in the world. And for investors who are looking to still get some exposure to crypto, we're seeing more interest in market neutral strategies, in quant funds. And I'd assume that more of these LPs or high net worth individuals are starting to look for more experienced fund managers and not some of these, I guess, cowboy fund managers back in 2017.
Yeah, that makes a lot of sense. A friend of mine, Jeff Dorman, who runs Arca Funds, has a huge focus on risk management. And I love that he focuses on that because there's so much correlation today, and that's how he outperforms. But, back to the hedge fund industry in Asia, do you think it's more or less affected than the global market? Because I know that we've seen, the numbers thrown around, like hundreds of funds have closed this year or last year at this point. But do you think that funds in Asia got hit harder than most, or no?
I'm not sure. I think the market has probably hit all the funds probably equally bad. I think it's really fund dependent and less so of a geographically dependent question. But I will say that given that a lot of funds who might not be as kind of vocal or public on social media or on the media, a lot of the funds here are managed by people with kind of experience, public markets experience. And I think a lot of those people from those backgrounds will probably be more well equipped to cater to kind of tackle the risk and the downturn in the market than someone from, say, a more traditional venture long only style. But to go back to your question, I think it's hard to answer that because I don't necessarily think it's a geographically contingent question. It's more of a fund by fund cases.
Yeah, that makes a lot of sense. Well, just going back to the appetite, though, do you think that there's any one event that could get us out of this crypto bear market? Or do you think that it's obviously a multifaceted approach where we need scaling on Ethereum, say, or use cases overall, or better regulations? What do you think is the key driver to get us out of here?
Yeah, I guess of course the cop out answer would be to say that it's a multifaceted approach, but to just make this more interesting, right? I think something like an ETF, of course, would be a good signal for the rest of the market, and I think a lot of people have been talking about that. And another thing is, of course, for a large crypto company like Bitmain's IPO to go through. Right now in Hong Kong, if you want to list a company, just to give your listeners a little background if they're not familiar, if you want to list your company on a public exchange in, say, Hong Kong, there has to be a 6-month evaluation process by a listing committee. And if you don't hear back by the end of the 6 months, you essentially have your IPO lapsed. That means it kind of just falls apart. And to my understanding, I think the Bitmain IPO is going to lapse in March. But if we miraculously hear some favorable regulation or some type of ruling from Hong Kong and the Bitmain IPO goes through, I don't think it's going to immediately catalyze a kind of recovery in the market. But I think it sends a strong signal to institutional investors that this space is getting more legitimacy. And I think it will be a small push for institutional investors to be more ready to enter the space. And I guess the last thing would, of course, be something that everyone talks about, right? The halving in 2020. Usually, crypto markets or Bitcoin returns into a bull market after or around the halving. But I think what would be interesting this time around is that if you look at yield curves, right, they're flipping, which is signaling kind of a bearish outlook in the economy. And some funds and some banks are starting to throw out 2020 as a year that we'll see a wider recession. So I think that throws a wrench into the mix because crypto has never really seen a macro bear market before or macro recession before. But if all things considered, if crypto can mature fast enough, the next halving would be a strong catalyst for the return of the markets, in my opinion.
Yeah, that makes a lot of sense. I always, the Bitmain IPO always struck me as interesting because we're basically going to have normal shareholders control one of the largest, say, Bitcoin infrastructure companies overall, which always, they're going to make decisions which affect the future of the company.
Yeah, absolutely. And I don't know what to think about that because, of course, on the asset class front, it signals more legitimacy. But on the decentralization, on the spirit of the technology front, I don't know if it's good or bad thing. And I'm curious about what your thoughts are because, like, on one hand, of course, we're giving more, I guess, power to everyday investors who finally have a say in Bitmain, which, of course, has a huge influence over Bitcoin. But at the same time, we're giving, I guess, more centralized entities that have significant control over Bitcoin even more legitimacy. So I'm not too sure what to feel about that, actually.
Yeah, that makes a lot of sense. And Jason, when you're thinking about whether it's a Spartan or whether it's for yourself, I mean, I'm wondering, like the hedge fund scene, when you're thinking about investing in projects, how far into, say, the religious followings of these projects do you get into? Like, do you guys, argue between the merits between Ethereum Classic and Ethereum, or are you guys strictly focused on, say, the fundamental metrics of the uptake of these platforms, the upgrades, stuff like that?
Yeah. Since we are a fundamentalist-driven, long-short, multi-strat hedge fund, we do focus a lot on fundamentals, right? We do focus a lot on the metrics, like the network value. We do look at the hash rate. We do build models around the hashing power for different coins, and we try to extrapolate where the price floors, the price ceilings will be. And our CIO, Kelvin, makes a lot of those financial decisions and makes a lot of those macro trades as well. But in terms of the technology, we also see ourselves as playing an important role in the ecosystem, right? A lot of people see these hedge funds as kind of, I guess, money-sucking opportunists coming into the space. But if you think about it, there hasn't really been a lot of ways for efficient price discovery. And that's why we see the huge mania in 2017 and huge calm down afterwards, because the only way for people to gain exposure to the crypto asset market is to go long. And as more hedge funds come in, I think we'll start to see more sophisticated strategies that help the market discover the actual value in a more accurate way for a lot of these assets. And that's one role that we see ourselves playing. And as an extension of that, because we do see ourselves playing a productive role in the market as an investor and also as an advisory, we do have those debates. And not too long ago, we were just kind of debating this project called Blocks Route, which we think is pretty interesting. And we do talk to a lot of developers and try to understand what their take is on different platforms, because at the end of the day, a lot of these developers will be driving the direction of the space. So yeah, we do have a lot of heated debates about different protocols and coins.
Yeah, that's interesting. I had Emin Gunser from Blockstrat on the podcast. I definitely have to
Yeah, I
point listeners
noticed.
to that one. But
Yeah.
just going back to, I guess, just hedge funds in general in Asia or for Spartan, whatever you feel comfortable answering, whether it's generalized or specific or whatever you can
Mhm.
answer. I mean, do you think that you guys in Asia place more of a focus on, say, fundamentals than U.S. hedge funds, or more of a focus on the community and the founders than U.S. investors? I'm just trying to see if there's any key investment differentiators between Asia focused funds and those focused in the US?
I think that's a really good question. So I think just based on the more high profile funds in US, right? So funds like Coin Fund or Placeholder or A16Z, Multicoin, a lot of these funds are very involved in their communities, right? They're staking on the live peer network. They're taking part in these communities. They are being very actively critical of things that they think are wrong in the market. And I think comparatively, maybe it's a cultural difference thing, or maybe it's the fact that a lot of these Asian funds or fund managers don't use the same social media platforms. We don't see as much discourse of that kind from Asian funds. So that's something that I would be very interested in seeing more of, right? More funds taking a more active approach into helping these networks, into building communities. And that's one thing that us at Spartan are trying to do. And I think that's one of the major decisions behind why the partners decided to kind of start Spartan Group in this way, to have an advisory arm, to help founders, to be very hands-on, and also to have skin in the game with the fund arm. So, and we do see a lot of other funds kind of taking a similar model, spinning off some sort of advisory arm on the side. So I think we're trending there, and I'm excited to see more Asian investors take a more active role in helping founders beyond just providing capital.
Yeah, that makes a lot of sense. And just going through some things that you look at as an investor, Jason, I mean, how do you think about market efficiencies or inefficiencies? Because I think that crypto is obviously extremely inefficient, which is like a great opportunity for smart people. But the other thing is, I'm just wondering when we actually get to somewhat of efficiency. I'll give you an example. Like Ethereum Classic got 51% attacked or reorg, depending on who you talk to. And I think that the price of Ethereum Classic actually went up. So, I mean, I would expect in an efficient market for it to go down, or even smaller proof of work based coins to go down on that news, and maybe proof of stake coins like Tezos to go up. But I'm just wondering your take there.
Yeah, it's interesting you bring that up because we literally just had this discussion earlier today. And I think looking at the ETC price, I think it went down a little bit, maybe like 7% right after that announcement, and then it went up afterwards, or some crazy, unreasonable movement like that. But I do think there's a general tendency, and it's a totally reasonable tendency for investors in the space to condemn an entire project based on a 51% attack. And it makes total sense, because the core proposition of a blockchain is security. And if you can't even guarantee that, then why do you have a blockchain, right? So it makes sense that people condemn these projects if they ever get attacked. But the truth is, a lot of these projects do recover. And if you look at the actual monetary effect of that hack, I think around like $250,000 were lost and subsequently returned, actually. But the actual monetary loss accounted for less than maybe 5% of the total network value. And I think people are probably pricing it in and thinking that, okay, other projects have had 51% attacks before and they're still around. And this specific attack only affected a tiny, tiny portion of the entire network value. And of course, a part of it could come down to irrationality, backholders just doing what they do. But I do think that the market is trending towards more efficiency. And I think there are, but again, it depends on what narratives you adopt to explain these phenomena. And that's just my personal view.
Yeah, that's interesting. And Jason, I don't want to push you to answer for Spartan. You could, of course, answer personally or generally if that makes more sense. But how does a fund think about these things? Like, would say a 51% attack lead a fund to say, hey, you know what, we can't invest in this anymore. The network's not secure. We don't know whether our funds are ever going to be able to get off an exchange if we have to wait 1,000 confirmations, or how does a fund think about things like 51% attacks?
So I think, again, it depends on what style of investing you're doing. We know that there are some long-only investing funds or long-only quote-unquote hedge funds, which might take a very, very heavy-handed approach to something like that. And for us, I think we really do it on a case-by-case basis. And for something like a 51% attack, of course, it's something that negative. We never argue that, okay, this is great for the network. But at the same time, again, it's kind of like a cop-out answer, but I'm hesitant to give like a blanket solution to every 51% for every asset, because it is a case-by-case basis.
That makes a lot of sense. And just going on that point on the decision making for funds, specifically in Asia, how do you feel about this whole? I hate the term generalized mining. I really just like active participation better. But what do you think about this whole generalized mining thing, where funds take part in the growth of the networks and the governance decisions? Do you think that funds in Asia are actively going to use, say, their tokens to make governance decisions, or maybe even start mining? Or do you think that level of participation goes beyond running funds?
Yeah, I think tracing back to the origins of that quote unquote generalized mining narrative, I think it really came from, maybe it was Jake from Coin Fund, who I have a lot of respect for, and of course other funds started adopting it as well, like Multicoin, and a lot of these are US based funds. And like I said before, in terms of like network participation, actually staking your assets and actually using your assets, I haven't seen as much of that in Asia funds that I'm talking to yet, but I do expect to see more of that. And I guess internally, we are driving a lot of initiatives to help out projects to be the alpha testers. And I guess that's our way of also actively participating in the development of these projects by, maybe seeding a project with some liquidity, or just testing out their product. Not necessarily just staking, but to make a long answer short, I think we don't see as many funds doing what you call active participation in projects from Hong Kong or Singapore, but I expect to see more. And a lot of funds in Asia, like Hashed from Korea, are taking the charge on that.
That's interesting, Jason. And let's zoom back out for a second. I think that a lot of people talk about regulation. I know you hit on it before, but do you think that Asian countries in Asia or entities in Asia, do you think that they're going to overregulate the space, or do you think that the US is going to overregulate the space? I mean, I don't think that the US will, because I don't think they want to, lose this battle. Just like they don't want to lose the battle on things like 5G and other technologies. But, what's your take there? Do you think this is going to be a one government takes most or all market?
Yeah, I think the same answer, you'll probably get the same answer from people based in the US, in that it's incredibly location dependent, right? So state by state in the US, we already have different types of regulation. And in New York, we have the dreaded bid license. And I think the same can be said for different Asian countries. Just very recently, we see Malaysia kind of ruling every single ICO that ever happened as a security, which I personally think is pretty heavy-handed. And I think that type of kind of rigid approach to regulation, to just outright banning everything, might not fare too well, especially if crypto is going to be what many people hope it will be. It actually provides a great opportunity for a lot of developing countries to perhaps start to make a stake in becoming a growing technological hub, right? And especially with a lot of these crypto projects, they're open source and talent can be pretty much hired from anywhere around the world. I think governments would do well to regulate crypto with an open-minded strategy, with an open-minded but cautious strategy, the same way that maybe the Singaporean government and even the Hong Kong government has been taking. And I really recommend people to look into Singaporean or Hong Kong regulation. And just to make a shout out here, Catherine Wu from Asari recently visited Hong Kong, always makes these amazing, succinct summaries of what's going on in these markets with regards to regulation. So I definitely refer your listeners to checking out some of her content as well.
Yeah, Catherine's a machine. I always follow her tweet storms. I learned, I usually have to read them twice. But Jason, on that regulation point, I mean, do you guys, being in Asia, do you have an advantage over, say, US funds or US investors, because you're able to invest in things that the US kind of prohibits? I mean, I know that people get around it with VPNs and stuff, but when an ICO used to launch, a lot of them used to be closed to US investors or even private raises. Do you think that gives you guys a long-term advantage being in Asia, or do you think that that's something that's not really an advantage?
Yeah, I think for that specific area, right, I think the edge comes from two places. One is, of course, access to deal flow, right? Just a lot of people think VC is a global game. And while innovation is global and, of course, crypto is decentralized, at the end of the day, to get deal flow, the easiest way is to get it in person, is to be proximate to those projects. And from a deal flow access perspective, of course, I think Asian funds will have better access to Asia projects than, say, US funds. And that's the reason why you see more funds start to take a bi-continental approach, right? So funds like Dragonfly Capital that raised $100 million and funds like Primitive Ventures, they're all taking a China/US approach to make sure that they have exposure to both markets. So that's on the access front. And in terms of the regulation arbitrage, we are seeing a lot of projects prohibiting US investors from investing. And of course, there are ways around that. But just from a convenience perspective, it does seem easier to invest out of a few Asian markets than if you're an investor in the US. And that's why a lot of funds are also domiciled, as Cayman funds for that specific reason. But again, I wouldn't purport to be an expert on that. And there are a lot more very qualified people on Twitter that I highly recommend people checking out because they do inform a lot of the thought in the space.
Yeah, that makes a lot of sense. And Jason, I hate to be biased here or just open, but I feel like there's a lot of projects in Asia that are somewhat subpar or just not as good as their competitors. And, I don't know what comes to mind, like, Neo or VeChain or Tron. I haven't done a ton of work on either of them outside of Neo, but I feel as though the US was somewhat of a closed community. So these other projects were open to investors and the ecosystem in Asia, so they took off. But I also feel like there's a lot of, somewhat shady news going on with a lot of those projects. I mean, do you see that on your end, or am I totally wrong here? If I am, just tell me.
No, yeah, I think you definitely have a point. And a lot of the projects that we work with on the advisory front, right? Projects like Origin Protocol and Market Protocol, these are US projects, and a lot of them are referred to us by the founders who had a great experience working with us. And looking at Asian projects, of course, again, Asia is a huge place. There are a lot of projects of varying qualities. There are amazing projects like Zilliqa and Bluezell, which is legitimate teams with very experienced founders. But there are also very, very dubious projects with what I call maybe aggressive advertising or aggressive growth hacking techniques that might strike a lot of people as extremely dubious and borderline unethical, right? So without naming any names, I can already think of maybe like 5 projects that does really dubious things. So there are exchanges with kind of dubious token mechanics to incentivize wash trading. There are projects that raised huge amounts of money by essentially plagiarizing white papers and sharing misleading announcements. There are projects that got caught for basically gaming their own giveaways. And I think one of the projects actually got caught on Twitter for gaming their own giveaway for pretending to be a winner on their own giveaway. And most recently, we also have exchanges that you would think are legitimate that liquidated the traders based on under very dubious circumstances, based on very opaque operations. And I think that I wouldn't say that's generalizable to a lot of to all of Asia in terms of as far as projects go, but there is an unhealthy amount of, I guess, very aggressive growth hacking techniques that do raise some concerns. And I think that's going to take a while for that type of stigma to be washed away. And the only way for us to grow out of that is through real development and actual progress.
That's a great overview, Jason. And what do you think is the percentage of accurate news from Asia that makes its way to America? I mean, I think the percentage is really low, and I don't think that we have a real great news source, but I'm just wondering your take, because I don't see that much news from Asia coming into the US.
Yeah, so I think there are. I guess that's because that's a function of crypto being such a niche space. But I think this is also a great opportunity to give a shout out to channels that I think are providing good and accurate and very insightful information on Asian markets. So of course, there's local newspapers like South China Morning Post, and they've been writing a lot of serious journalism on crypto in Asia. And like I said before, there's Catherine from Asari, and she's always keeping an eye on Asia and making sure she's translating some of the content across. And also Joyce from Global Coin Research. She writes an amazing newsletter and does a podcast that's specifically focused on crypto in Asia. And it really takes people who are on the ground here in Asia to understand what the market is going and who are willing to bridge that information and bring some of that information across to the US to kind of bridge that gap. But I very much agree that there is a gap, not just because of language, but perhaps because of just the fact that the two places are so far away and the culture is completely different. that I think some bridging is required. And we can go on for another hour about that, but I'm going to stop right there.
Yeah, it's also somewhat biased based on specific projects that people follow, et cetera. If they're only following like US based projects, they won't see the news. But Jason, just going on to, you gave us a great overview and a lot of detail on Asia and the crypto scene there. Let's go on to Jason Choi. So let's tell us about the Block Crunch podcast. Tell us about some of your favorite plays right now. Definitely interested to hear it.
Yeah, for sure. So the Block Crunch podcast is very much intended to be originally just a collection of recordings between me and some investors and developers who are willing to talk to me. And over the past year, it kind of evolved into a podcast by crypto people for crypto people. So I'm focusing a lot of my time interviewing developers who are building projects, understanding their pain points, understanding what founders' go-to-market strategies are, very much trying to understand what the builders in their space are doing. So one of my favorite episodes was with Tian Li, who's based in Beijing, and he is the co-founder of DDEX, which was the biggest relayer on 0x. And not too long ago, they forked away from 0x, from the 0x protocol, to build their own Hydro protocol. And that has a lot of lessons for people who are building decentralized finance projects or investors who are looking into crypto. But almost none of the information was really shared in depth. I think they shared some information on their Medium page, but I was very grateful for him for basically coming onto the show and giving me an hour of his time, just diving into the very exact reasons why they decided to fork. And he was being very honest that, okay, the chances for failure are probably high, but this is worth a shot. So I always find honest conversations like that with founders incredibly fulfilling. Yeah, and I forgot the second part of your question.
Yeah, no, he was so honest on your podcast. I mean, he basically said, look, we're forking off doing our own thing, but if this fails, we're going right back to 0x.
Yeah, exactly. So I really enjoy conversations like that. And of course, my interview with you, I think that gave a great overview for institutional research for listeners out there. And just a little bit of tidbit that was actually the most listened to episode across the entire lifetime of the podcast. So thanks for that.
Wow. Damn, that feels good. Yeah, I'll link to it in the show notes. And Jason, just going on though about yourself, I mean, like, what are your favorite crypto plays right now? I mean, are you focused more on protocols? Are you focused more on pre-ICO deals potentially? What's your focus?
Yeah, so we're definitely focusing less on pre-ICO deals. While projects are raising at fair valuations, like I said before, they're raising at valuations that are more akin to traditional seed stage rounds. Deal flow there are some exciting projects coming out, right? But deal flow hasn't been as quick or as exciting as, say, if the market was at a healthier place. But at the same time, in the secondary markets, in listed assets, we are seeing more attractive opportunities for us to invest in projects at a more reasonable valuation. So to give you a very general answer, I think that my favorite plays would definitely be some of the listed assets, and just basically targeting quality projects that are perhaps mispriced because of the recent constant downturns. And that's something that I'm spending a lot of my time on.
Yeah, that's interesting. And Jason, brings up another question I had for you based on Asia and China focus. A lot of people talk about censorship in those countries, over there by you. And I'm wondering, is that limited to communication? I mean, my problem with censorship is, how will people take part in governance decisions when governance, really grows up in the crypto space? I guess that's my concern.
So that's a huge topic that's deserving of its own episode. But as far as censorship goes, I think instead of kind of providing you with an answer, I'll again refer maybe your listeners to Elizabeth Economy, whose book, The Third Revolution, has 2 great chapters on the entire censorship strategy for a place like China. And I think that provides a lot more insight than I could provide. But just to give you a quick thought here, crypto is made to break rules, right? And I think a very good quote that I recently read from one of the people who's worked at BitTorrent for a while is that something like Bitcoin is made to break rules. So crypto is here to break rules. They're here to transgress for the better or worse. So whether or not censorship exists should not affect how crypto develops if it's meant to achieve what we think it will achieve. So it's only in these very adversarial environments that we will see something like crypto live up to its potential, right? Like in regimes like Venezuela, which a lot of people talk about. So I don't have to rehash on it here, but we really see Bitcoin really becoming a store of value that beats fiat currency. So it's a very broad question, and I think the broad question I will have is, of course, the broad answer I will have is, of course, to refer again your audience to Elizabeth Economy, and just to kind of keep our sights on what crypto is all about.
Yeah, that's interesting. And Jason, just on the governance point there, I mean, do you think that the Asian fund scene has a strong focus on governance? Like, are you guys actively participating in decisions when you can or can't, or is that not something that you think is there yet?
You mean in terms of something like staked voting, or?
Yeah, like if you were to purchase tokens in MakerDAO, or are you voting on the stability fee change, or on Tezos on any upcoming changes, or Decred any Politia votes? I'm just wondering if you guys are focused on governance actively.
Mm-hmm. So I can't speak to other funds, but for us, we definitely have a very healthy interest in governance, right? So we're actually just looking into Decred, and I think in our research, we actually came across your recent report on it as well. And MakerDAO is something that I've personally looked at a lot, and I'm actually bringing on Rune onto my podcast soon as well. And governance is something that I personally, I guess, outside of Spartan, have a lot of interest in. So we're looking at things like Polkadot and Edgeware, and they're coming up with some very interesting developments. And I'm talking to someone with Decred. Actually, you introduced us, so thank you for that. So yeah, I think personally, I have a lot of interest in governance, and I don't see why funds wouldn't if they are truly invested in the long-term development of the space.
Yeah, that's interesting. For full disclosure, I do own some Ethereum, Decred, and MakerDAO. Those are the ones I mentioned, and there's disclosures in the podcast notes. But I just think it's interesting how governance evolves. And Jason, one of my last questions for you: how do you feel about interoperability between blockchains? Do you think that this is something we need or don't need? I know it's a random question, but I feel like you would have insight here, being where you are.
Yeah, it's a hard question to answer, right? You see some of the top talents in the crypto space who are kind of figureheads in their own right with a lot of control over developer mindshare, like Jay Kwan from Cosmos and Gavin Wood from Polkadot, building these very complex solutions to solving problems that could become very real if this Web3 vision is to fully realize. Personally, as an investor, I think it's a weird time to get into it because I don't remember the exact valuation for a project like Polkadot, but I think it was somewhere up in the $200 million range. But of course, if crypto were to live up to its full Web3 vision, that valuation might be paltry. But at the same time, given how experimental the space it is a strange time for investors to get involved because you really need to be very, very highly convinced to make a bet at that type of valuation. But on the tech front, without going into too much technical detail, I'm personally interested in seeing how Polkadot and Cosmos emerge in this interoperability field. Because I think, correct me if I'm wrong, but I think Polkadot is launching this year, and Cosmos is already launching, and a few projects that we're talking to are working on similar but more simplified approaches to interoperability. So I think more developer mindshare is definitely going into solving that problem. But it is a strange time for investors to be involved.
Yeah, I agree. I'm working on this now. It's going to be the focus of our next report. It'll probably be out before this goes live, which is good, but not a big deal. But because we're not making any specific calls there. But I definitely think it's interesting on how that'll play out. And Jason, my last question for you: what are some crypto beliefs that you hold strongly, or you think that won't change?
Yeah, that's a good question, and I think just to make this more interesting, right? Instead of saying something generic like I think Bitcoin's here to stay, just to make something contrarian, I believe the more money is poured into crypto from VCs, the better. So I think a lot of people would disagree because they think it's all speculation. We're all just hyping up this vision that's going nowhere. We haven't seen any major launches in a while. But to me, these VCs and investors are basically fronting the risk for experimentation and development. And I'm a decently young guy. I haven't seen, a lot of cycles in different markets and industries. But I would say that crypto has been the fastest and most fascinating explosion of just random ideas from the smartest people around the world. And a lot of that is possible because these people have the capital to hire people to attract talent, to build out these visions, to experiment with these things. And I think a lot of these things will probably fail, But at the same time, the speed of experimentation that we get probably cannot be sustained without so much money, without so much people believing in the space and pouring money into basically betting on the space. So speculation is definitely a two-sided sword, but I'm more leaning on the side of hoping more investors would come in and explore this space, even if it's a decently risky space right now.
Yeah, I couldn't agree more with you. I mean, we not only have such a small percent of global investors and interest, we just have such a small percent of the global developer base. Like, there's millions of developers around the world. There's only a small fraction that are currently involved in crypto.
Yeah, absolutely.
That's awesome. Well, Jason, thanks so much for coming on the podcast. I'm definitely looking forward to having you back on again soon.
Yeah, thank you so much, Tom. I had a lot of fun.
Oh, and Jason, before I let you go, where could people follow you and find out more about what you're doing?
Oh, yeah. Thanks for asking that. So if you're interested in reaching out, please find me on Twitter at Mr. Jason Choi. I basically am very active on Twitter, and that's the one place you can always find me.
Awesome. And where can people find the podcast?
Yeah, the podcast is available in any major podcasting app you're listening to. And we're currently being distributed by the Let's Talk Bitcoin network. So it will be available in more places, and I will announce that on my Twitter very soon.
Awesome. Jason, thanks so much for coming on.
All right. Thank you, Tom. I had a lot of fun.
Hey, everyone. Thanks for listening to the podcast. Please rate, review, and share the podcast to help other people find it. And be sure to visit 51pct.io and enter your email to get our research alerts delivered directly in your inbox.